everybody, it's Dina again with the Rhode Island Wave newspaper and Spotlight interview series. Today I have the pleasure of being with Dan Kenyon. Dan Kenyon is from Embrace Home Loans. Dan, how are you today?
I'm doing great. How are you doing today?
Dan, I'm pretty darn good, all things considered, you know.
That's awesome.
Dan, tell me a little bit about you. Where are you from?
Okay. I'm from East Greenwich, Rhode Island.
Okay.
In fact, my office is in East Greenwich on Main Street. I've been a loan officer with Embrace Home Loans now for 14 years.
Wow.
I worked many years in the Middletown corporate office, but had the pleasure to move over a year and a half ago to the East Greenwich office on Main Street, working with purchases and refinances.
That's wonderful. So was the home loan, was that your first endeavor in this kind of business situation, or were you
in the financial part of the business? Yes.
That's wonderful.
You know, before that, I was working in retail, servicing restaurants, bars, and clubs.
Oh, so for retail loans?
No, for products.
Oh, very
products
cool.
I did. So I had the opportunity back in 2010 to come into the industry just as a lot of the rules had changed.
There you go.
There was a big issue back in 2008, 2009 with housing, and they updated a lot of the requirements to get a loan and for someone who would be doing loans.
So. Wonderful, wonderful. So I know that you guys offer, I've heard you speak about it before, you guys have a lot of different products that you offer.
Yes.
Anything special going on we should know about?
Well, one thing that's very important that's happened to me recently is that I've become licensed to work in Rhode Island housing, Mass housing, and Connecticut housing as someone who can do first-time home buyer programs. Mm-hmm. And those are important programs for people who are looking to get some help. They may not have the full amount of money to do a down payment or cover their closing costs. And all three states offer some competitive programs where you can get $15,000 to $50,000
wow.
to help you purchase a home through those programs, Mass, Rhode Island, and Connecticut. So now I can service the whole area. That's kind of where I've been really pushing retail sales for purchasing homes.
That's wonderful. So you would help the client figure out what they qualify, if anything, for?
Yes. Typically what I do is I sit down with the client. Mm-hmm. We'll go over what their goals are. In the process of purchasing a home, the really important thing to do is to get qualified to buy your home, to know what you can buy.
Right.
You don't want to go look at a home that's $200,000 above your budget and not, you know, fell in love with the home, but now you can't buy it.
Right.
So it's really important. We spend a detailed amount of time to sit down with everybody involved, kind of get an understanding of what they're hoping to purchase, and then how they are set up to purchase.
Right.
What their income is, what their credit is, more importantly, what they may have for down payment and closing costs to ensure that the homes they go look at are the ones that they can afford.
Right.
And then I pass them on to a list of realtors that I work with. We work with Dave Antonelli from Slocum and a few other people that I work with. So I would pass their information on there, and then they would go looking for homes.
Okay, so what do they need when they come? Should they see you first before they should see you before they start looking?
Correct. You definitely want to make sure you get qualified and know where you stand before you even look at a home.
Right.
Because you don't know, first off, there are certain programs that can help you where your credit is. You can get the assistance through the Rhode Island housing, Mass housing, Connecticut housing. And then you can look at then when you go out to look with a realtor, you're looking at the homes you can put qualified bids.
Right.
So you're not wasting their realtor's time, your time,
right.
or even the person who's putting the house up for sale.
Right. So now what are they going to need? Tax returns, W-2s?
So it depends on their income. The first thing is we'll break down their income. If they're W-2 and pay stubs, we would simply need 2 years of their W-2s, a month's worth of pay stubs, and then their tax returns for this would be 2024 and 2023.
Wonderful.
If they're self-employed, we have multiple programs that can help them, but we would first look at their income based on what they report on tax returns.
Right.
But we do have programs that you don't have to use tax returns. Some of us sharpen the pencil on our write-offs on the tax returns. We may not show enough income on there. So we have programs that can counter that, where we don't look at tax returns when you're self-employed. We look at maybe the deposits into your bank account for 12 months or 24 months. If that shows enough money, we can use it. Or we would look at a program where if you're withdrawing your money out of a savings or out of an IRA, you're retired, the asset depletion that comes out of that. So you still can buy a home even though you don't think you make enough money on your tax returns. There are alternative programs. We also help people that are retired. Yes, people can buy a home if they're retired. We look at their pension income, we look at their Social Security income, or if they have other assets like another rental home, we can look at that as their income as well.
So they should actually come see you when they're in the pre-planning stage.
Correct. If they're just kind of starting to kick the tires, thinking about, what would be what they could be available to buy, and how their profile looks to that, and then now lets them narrow down their search to that price range, and then they can go look at those homes in that section from whatever I always look at where their highest would be, and then what they prefer their payment to be.
Right.
So I give them the two examples. That this is your best case, highest example of what you qualify for, and this is an estimate of what the payment would be. Then we talk about what that payment would be comfortable for them on their budget versus maybe student loans, car loans, other expenses that they have. How can that payment work for them so they can budget into their monthly budget?
Right.
That new payment.
Right.
It's a great question.
So,
do you want me to give you a couple examples of some unique things that we do?
yes, I want to know the unique, what makes Embrace Home Loans and you unique?
The first thing that we like to kind of handle with our buyers is that we're here as a not just a client and a borrower. I mean, I'm sorry, a mortgage company and a borrower. We're here to make sure we achieve their goals. So the important thing is to really have a detailed conversation in the beginning of how they want to proceed, what they would like to do at the back end, and what is comfortable for them to live with.
Right.
That's most important. Then we do have certain ways to go. Like we have programs through the normal conventional FHA and VA programs. And then we also have these non-QM, they're called, programs where you can qualify based on different types of income. And also we have jumbo loans as well. One unique program that we have for people in this kind of environment now, people who have been in their homes for a while, they may want to look at buying a home as an investor. They want to get what they could kind of consider passive income, rent income every month coming in by buying an investment home. There's a unique program that we have right now called a DSCR loan. It's a debt servicing loan. You are allowed to buy a home not qualifying with your debt, your mortgage, or your income. You qualify simply on that particular purchase what the monthly payment would be. So the monthly payment on that mortgage is put up against the rent on the home. And if the rent covers the mortgage payment, you can buy the home. You don't have to worry about qualifying with your mortgage payment, your student loans, your car payments. All that is not considered. It's simply what that 1, 2, 3, or 4 family home will generate in rent versus your mortgage payment.
Wonderful.
And you can buy up to multiple homes that way.
Well,
Not have it affect you. And a lot of people stop from looking into investments because they're afraid that they wouldn't qualify because they have maybe a $3,000 mortgage and they have student loans that are $1,000 a month. They have car payments that are $500 or $600 or more a month. Oh, I can't then go ahead and put another mortgage on my bit. Huh?
right.
We can do the purchase and separate all that away.
Wonderful. You just got to make sure you have the intestinal fortitude to be a landlord, and perhaps maybe you're a little handy.
Correct. It would help you if you can be kind of handy fixing it and have the intestinal fortitude, as you say, to handle renters.
I was a landlord for a while. It's not the easiest thing that a person can. It sounds easy, but it's not.
Correct. It is an investment of your time. But there are some companies that would actually manage the home for you. So you could reach out to property managing companies.
Oh, yeah.
And they could help you. If it is a fee, so it costs you money. But if you want to be free of that, you can have that as an option for you as well. The one also unique thing about the DSCR loan is the program allows you to close that loan in an LLC.
Oh.
And that's important because in some of this litigious world that we live in, people can then go ahead and shield themselves from any issues by having the owner and on title as an LLC.
Ah,
So then you just, if any issues happen, they sue or deal with the LLC. They don't deal with your personal property or sue you personally.
oh, that's a
Because,
good.
yeah, and it's one of the few loans that let you do that.
Wow, that's a
kind
good
of
thing to know.
Yeah.
Mm.
I also wanted to kind of talk about, in one way, what's going on in the industry. We are finally seeing a curve coming back around, where there's a potential interest rates to come down.
Right.
In fact, the Federal Reserve is expected to meet tomorrow and hopefully give us some direction on where they're moving forward. And the bet out there is that they will take a decrease.
Right.
How much, we don't know, but that may start a series of Federal Reserve meetings through this year into next year where they'll lower the rates.
Right.
And the reason why I'm saying that is because I also do, and in my history, a big part of my history is doing a refinancing. So there are a lot of people out there over the last 5 years, especially the last 3 years, who have purchased homes at an interest rate that is higher than where potentially they can go.
Right.
So they may be somewhere between 5.5% and 7% based on where the rates were when they bought the home. This may be an opportunity for them to take advantage of when the rates, I quoted a rate the other day of 5.25%.
Well, that sounds nice.
So they may be able to start looking at an opportunity to lower their monthly payment by refinancing out of the loan they did over only the last couple of years, where they're paying a much higher rate, 6.5%, 7% or higher. You transition that to a 1 or 2% decrease in your payment, you're looking at for $400-$500 a month.
Then you can start going back out to dinner again.
That's definitely true. That's definitely true. Or enjoying some other activities that you can kind of put on the back burner.
Exactly.
But also about the whole process of doing the refinance is they may also have the opportunity, if they didn't put the full 20% down, they're paying what's called private mortgage insurance. It's an extra insurance that goes on their monthly payment to secure the fact that you didn't go to 20% down. You may now have that equity in the home. So you can not just lower that rate, you can stop the PMI, it's called, the private mortgage insurance, which could be $200-$300 a month that you're paying in addition. So you could turn around making $700-$800 in a difference of a monthly payment. And that's the game changer.
Yeah, there you go. That's a lot of money.
Yeah, and then what you do with that money is something that we also talk about at the end. Are you taking some of that money and paying down the other debt you have faster? Are you putting some of that money away to maybe for a rainy day?
Right.
Or you have an opportunity to maybe make an extra payment or more of a monthly payment to keep the acceleration of your loan going down faster. So it's exciting that we now can talk about that. We haven't been able to talk about that for a long time with the potential.
Right.
Buyers, people that have bought their home over the last couple of years, hopefully now we'll have an opportunity to make the loan work for them. Make them lower their payment.
Wonderful.
And save money.
All right, now tell us again, how do we get a hold of you?
So I have a cell phone 24/7. I work on the weekends, which is very important for purchasing. So my cell phone number is 401-378-0441. You could text or call me at any time. I understand people's needs differ. I am a little older now, so my kids are in their late teens, early 20s, so I definitely have more opportunity to work with them. Also, my email address it's my name, first initial D, Kenyon, Kenyon, at embracehomeloans.com.
Perfect.
So you can email at any time. I also have a Facebook page under Dan Kenyon and an Instagram under Dan Kenyon too.
Wonderful. So you're out there. We'll put that information on the screen.
Appreciate
so
that.
People can find you. And whether you're in the pre-planning stages of buying a home or an investment property, or you're looking to refinance, Dan's your man.
I really appreciate your time. Yeah. Please give me a call. I'd love to help anybody.
Awesome. Thank you so much.
Thank you so much.